while the market, some saying for the short term, seeing a bit of correction and emphasizing that the underlying tone of the markets and the global economy remains positive. What's your view on where we're at the moment?
Good afternoon, Alishia. Not surprising that the rand has weakened a little bit over the last few sessions. We've had some profit taking across all the sectors. We've seen gold push lower. We've seen the equity market stabilize somewhat. We've seen the dollar fight back a little bit, and I put that all down to a bit of profit taking across those asset classes. A couple of concerns on the rand front, and in your build-up and in your news stories, you mentioned the COSATU making some noises around MTN and Bharti. But more importantly, perhaps, and we'll have to watch this one with interest, is their noises that they're making around the Reserve Bank's independence, the fact that they want to move away from inflation targeting, and the fact that perhaps they're looking for a seat on the board of the Reserve Bank, and that will speak to the independence of the Reserve Bank, and that's causing a little bit of concern in the market at the moment. And as I say, we'll have to watch those stories with some interest.
While we're talking about the Reserve Bank here, I mean, of course, we've got monetary policy meeting kicking off this week. Do you think, to what extent do you think the markets are actually starting to price in a rate cut at this stage?
I don't think that's a dominant factor at the moment, Alishia. The rand has been dominated by international stories for months now, and the domestic sort of influences have really taken a back seat. Whether the governor cuts rates by 50 basis points or in fact leaves rates on hold, at this stage I'm not sure whether it's going to have a major impact. We'll obviously have a little bit of event pricing in as we move towards the MPC, but I don't think it's a major or a dominant factor in the markets at the moment.
As you've said, what the dominant forces are those international moves that we're seeing, where we've seen what have been rand positives of late really being reversed, the pull away from risky assets, offering the dollar some reprieve for one. What are you making of the strength that we've seen filter through on that end?
I don't think it's unexpected. We've had the euro break up from the 144 area, got as high as 147. It's not unexpected that this is profit taking, and that's the way that I'm viewing it at this point in time. And the market really taking a breather as central banks are also viewing their next move. We've got the Fed just trying to decide if and when an exit strategy is prudent and how that plays itself out. So I think the market's all taking a bit of a breather and largely expected, as I say.
Of course, it's hard to ignore the other element that has offered the local unit some support over the recent past, and that is the gold price. Are you bullish on that price moving forward, considering that physical demand for gold is still pretty weak?
Well, I think gold has been moved again by those international factors. I think I mentioned a couple of interviews ago that gold was really moving, in a bullish tone on the uncertainty in the markets, and investors and funds having a look at it and saying, well, unsure as to the dollars might going forward, unsure as to the equity markets going forward, and how the deflation, inflation story plays itself out, and hence gold, attracted a lot of attention purely from a store of value point of view. Now, for me, none of those questions have been answered. We have had gold run up from about 940 all the way to 1,020, in fact, a little bit more than that. I think, again, it's in that, taking a bit of a breather. But I wouldn't be surprised that in the coming days, couple of days' time, gold moving up again towards the 1,020, 1,030 area.
Well, earlier on, you were talking about the fact that we're waiting for those interest rate decisions, not only out of the BOE, but the US as well. We've got investors waiting for detail, as you said, on a possible exit strategy from the current quantitative easing policy. Of course, this in light of sustained improvement that we've seen over the recent past when it comes to US economic data. Now, we have the market anticipating US leading indicators this afternoon. What are your expectations there?
I think for me, Alishia, as far as the Fed is concerned, they'll be looking at the unemployment situation. That's the key to this supposed recovery at the moment. At the moment, the market's still talking a little bit about a jobless recovery. We're still having job losses, albeit at a slower pace. I think the trigger for the Fed on any potential exit strategy, and they've in the last few days and last few weeks, they've kept talking about the fact that exit strategy is a long way off. But I think the key for them would be positive job growth a reduction in the unemployment rate, and then the exit or the possible exit strategy will come to the forefront, and then we'll begin to get more detail as far as that is concerned.
Well, hopefully, if consensus is right, they are expecting a rise for 5th consecutive month, and that would hopefully reflect a steady increase in economic activity on that end. On the local front, in the meantime, we've got retail sales numbers in focus today. What are you pricing in moving forward from here on out?
Well, I think, again, like the global situation, a slightly better than expected a figure that came out, and really that reflects the global situation at the moment. And one can't be too surprised at that, given the amount of stimulus that's poured into the system. But again, it's the real economy that's in question at the moment. The unemployment numbers in the US and in fact across Europe as well. The consumer in South Africa is still under pressure despite the numerous rate cuts that we've had. So the real economy is still problematic at the moment, and we'll be waiting to see when and if the real economy turns, because deflation is still a threat. Asset price deflation is still a threat across the globe, and of course that will have implications for investors' sentiment going forward.